Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, June 16th, 2009. As I do this video midday, folks, we are seeing a little bit of a sell-off on Wall Street, a beautiful sell-off, in fact, that we kind of started right before lunchtime. Now, the volume today is very muted, but what I do like about this sell-off is you have seen a little bit of an increase in volume over the last four candles on the sell-off, and you can see that right here on my volume chart at the bottom. Now, the key about today was this, folks. We had a lot of economic data, but it all came in pretty much in line with expectations. There was nothing shocking out there whatsoever. In addition, the big catalyst for the day was the dollar. The dollar is really what started this market to the upside initially by gapping lower, and then actually the dollar has rebounded to cut its loss somewhat, and the markets have just tanked on that. That's the bottom line, folks. The dollar, and I preach this in themoneystocks.com here, our chief market strategists, including myself, have preached this to our premium subscribers as well as our free guys that watch these videos, that you have to understand it's the dollar. This is everything, folks. I can't stress that enough. The dollar is what makes everything rotate here. Whether the market's up or down, it's the direction intraday of the dollar that depends on that. Now, I want to express to you exactly what I mean by that. So what we're going to do here, we're going to discuss our key levels, our technical trendline analysis, which is really the number one thing out there. Then we're going to look at the dollar as well. But first of all, let's look at what the dollar's had and why the impact is so key, after which I just want to quickly, briefly go over what the markets are doing. Dow is down 74 points, the NASDAQ down 12, and the S&P down about 9 points, just about a little less than 1% across the board. So it's not a huge sell-off by any stretch. But the bottom line is this, folks, is that the key here is the dollar, and I want to show you. So the market gaps up today, right? We all know that the market gapped slightly higher. We kind of floated up a little bit in the early morning session on very, very light volume. I want to show you why that happened. All right, it's simply put, it's the dollar. Why? Because the dollar moves lower, and then the commodities move higher. When commodities go up, you have stocks like ExxonMobil going up. When ExxonMobil goes up, you better believe it, the markets will move higher. And that's exactly what's been going on here, and I want to show you to a T why. So let's look at the UUP. Here it is. UUP pushed up big yesterday. What happens to the markets? They get crushed, right? Absolutely decimated yesterday, right? So we were down about 2% on the markets. Why? Because the dollar was strong. That caused a pullback in commodities. All right, well, what happens today? The markets gap slightly higher. What happens to the dollar? It gaps lower. Here's where we closed yesterday. The markets and the dollar gaps much, much lower. Now, what happens the first half or quarter of the day, I should say? The dollar actually starts to push up. So you actually get a move up on the dollar initially, and then the dollar starts to fall. So let's take a look at how that reacts. All right. So the first hour or so of the day, the dollar moves up. What happens to the SPY? And then we see how the dollar moves down. And let's also take a look. And let's do a little lab experiment here. So initially, what we see is a gap up here, and the markets sell down. Notice how it's the exact opposite of what I just showed you. Then what happens? The dollar starts to decline. What happens to the markets? They move up beautifully. So again, see this pattern? It's kind of like a V. You should see the opposite pattern on the UUP. Let's take a look. Look at the opposite pattern. So an upside down V. So I want to just point this to you because it's so imperative that you understand how much the dollar impacts the markets right now. It's everything, folks. I can't stress that enough. I don't care who had earnings. I don't care what economic news came out. A good example today, you had tons of economic news, but it just doesn't matter. It's all about the dollar right now and how it affects commodities. So you have the dollar declining, and then this is the beautiful thing, guys. Right around 11:30 is when the dollar drops to the lowest point of the day, and then you've seen a very, very nice move up on the dollar over the last 2 hours. Well, what's happened exactly to the spiders? Let's take a look at the market. Right here, just as the dollar is bottoming out, the market reaches its peak. And then what happens after that? The market dives. All right, so you see how it's exactly opposite what the dollar is doing. I mean, there's no doubt in anyone's mind here. If you just look at these charts, how it's trading. If the dollar is getting hit, the markets will move higher. If the dollar is rising, the markets will move lower. And precisely that's what we're seeing today. That beautiful move on the UUP here has caused, right here, nice move up, has caused the markets to roll over beautifully on the spiders, as you can see right here. Now, the key here is this. All right, so obviously we know that the dollar impacts the markets beautifully. I'm going to erase these lines so we can really focus on trend line analysis. But the real question would be is, well, where do you know where it's going to stop? Because the technical trend lines will coincide with everything. And this is the beautiful thing about understanding technical trend line analysis, price pattern, and time, is that every chart will coincide. So just as the dollar gets a little toppy on this move up, what you're seeing is a little bit of support coming in the spiders. Now, why? Based on technicals, let's take a look at where the spiders are. All right. First of all, let's talk about what happened today. So you gap up and you fill the gap. See this first candle, gaps right here, and then you sell off to fill the gap. First of all, you have to know that's a bounce coming into play. No doubt about it, there's a bounce that's going to be in play right there, and you do get that. The next candle bounces right back up. Then you start to trade down to this 20 moving average. So obviously that's a key level. At that point, you start to bid up, and the market kind of comes up right back to the highs of the day, just underneath the 93.40 level. 93.40 is one of our master levels, and again, we've talked about that intraday many days in a row here and had it on our charts, obviously. Now, we know that that master level is a key signal because we had talked about this and alerted, especially to our premium subscribers, to watch for a close below that. If you did see a close below it like we got yesterday, there was a high probability you'd see some more downside today. That has worked to a T, guys. Absolutely. Absolutely 100% has worked out beautifully. Now, the sell-off began here, and you really just started to roll down. Where was their first stop? 92.50. 92.50 was our key level from yesterday and multiple days ago that we were watching because it was gap fill. All right, we isolated this level to our premium subscribers and had them watch it for multiple days. Once we broke the 93.40 level, we said that was your next stop. It went there beautifully, and then sure enough, off of that, you got a little bit of a boost into the close on late day buy programs in ExxonMobil and so forth. So that worked out absolutely tremendously here. Now, the bottom line is you can see how the market fell down here, came right down to that 92.50 level, right above it, and then bounced right back up. You can see a little bit of a pause bounce right there. So the market kind of stalled out there, and that's giving you a key technical level. You know you're going to get a little bit of a pause there or a bounce. At that point, what happened was the market started to roll over, broke the key level, actually was able to take out this slanted level, which is not a big level by any stretch. But the next one to watch was 92 even number. All right, now you might say, well, why was 92 even number such a good level? Well, this is where you have to understand the rules of technical trendline analysis. You have to understand that you have to look at all time frames. All right, so that's the bottom line. You have to look at all different time frames, and what I'm going to show you now is going to tell you exactly why. Take a look at this. So the market sold off today beautifully off of a little bit of a bearish pattern right off this level. And this is the 60-minute chart you're looking at. All right, 60-minute chart, beautifully done. And this is how we knew that level was going to be key yesterday that we bounced off of so precisely. Because if you go back to before June 1st, right back to the May 29th, you see this is gap fill. We never filled this gap. As you follow this line across, you never filled that gap until yesterday, at which point you were going to get a bounce. We sure got a bounce. Today we got the little bit of a sell and a reflex bounce down. Where was our next target? $92. Why? Because the 200 moving average was precisely at this level. So this is good support. In fact, right below that, you have another major level of support at 91.60. 91.60 is a major level on this market, plus this 200 moving average right here is a major level. Again, right here, major level right here at 92. If you break 92 and close below it, you're going to go right to this 91.60 level, which will be a tremendous amount of support. So again, it's all about putting time frames together and understanding. All right, we obviously knew on the intraday chart this level was going to be key. We got a little bit of a bounce there. We knew each of these levels above it were key, and we got consequent bounces or equal bounces off those levels each time we came down. You can see yesterday right here to 93.40, bounced right back above it, then fell down right to the 92.60, 92.50 level, bounced up just underneath the 92.40 level again, rolled over, bounced here, then broke it. Where did you go? 92 even number, beautifully. All right, this is also an even number play. Those of you that are in the chat room and know about that very well. That's a key scalping play we use. But in any case, this is what you're looking, guys. You're right here at master support at 92. If this breaks 91.60, will be your next spot. All right, again, so much going on here. It's a very light volume day, in fact, except for the last few candles. Last probably about the last 45 minutes or so has been decent volume off of this big move down. But for the most part, it's been a light volume day prior to that, and you're still seeing the master levels, the technical trendline analysis, price pattern and time telling us everything. And how do you know? Well, take a look at this. Right here, in spirit of bear flag, right here. This is telling you you're going lower. Beautiful pattern right there. You obviously had the 50 moving average and the 20 rolling over as well to put extra pressure on it. If you can understand this, you can do anything. I have no doubt in my mind. So I do encourage you all to come join the Research Center. You'll get tons of services in there. We just pack it full of stuff. There's a new one coming even that's going to be even better, and that should be debuting this week or later this week or possibly just next Monday. But in any case, watch that very clearly, guys, closely. Continue to learn your technical trendline analysis, understand your price pattern and time. Join the chat room, Research Center. We also have a new webinar date posted. I encourage you to join that, and we will see you all tomorrow. Take care.